All right, welcome to part 3. All right, this is part 3, breaking retests from sell to a buy. Okay, this is part 3. All right, okay, so just like before, this is a bearish trend. This is a selling market, right? So let's go again. We have to bring it into life. Now, before we bring it to life, I want to make sure that I put that out there. All technical analysis has to be based off the highest time frame. The highest time frames would be as follow, right? The month, right? And then the week. So we go from the highest to the lowest, right? And then the day, okay? Month, week, day. That way we are seeing the bigger picture, okay? And our chart is not too overwhelmed with a lot of line, a lot of zones, all right? So we let that trade come to us, and the higher the setup, when it comes to the time frame, the bigger the play, the more profit you will get, the more money you will make, meaning it will buy for a longer period of time or sell for a longer period of time, or more likely to do so, okay? Now, this setup, it's again, we're going to get a basic trend reversal with a continuation. So let's go ahead and bring this to life where we talk about this bearish trend or this downtrend that's going to switch into a buy-in trend. So let's bring it to life. Again, when a selling market or a downtrend or a bearish market, we're going to get as follow: lower lows, right? Where each low is lower than the previous low. That's why we call it a lower low. Okay. Again, and after every lower low, look to see the market, look for the market to give you a low high. Okay. And then after, of course, after each low high, you got a lower low. Now, these are called lower lows. I mean, lower highs, because yes, it's high, but they're getting lower. Each high is getting lower than the previous high. Okay. Boom. So with your homework also, with your brief paragraph at the bottom, I need that information. Okay. I need you to write down for me that when a downtrend, right? The structure that it gives you are lower lows and lower highs. So if you said low high, lower lows, same difference. And I need you to tell me that, after each lower low comes a lower high, and after each lower highs comes a lower low. That's what a bearish trend or a selling market or a downtrend consists of when it comes to the characteristic. Okay. Just for that itself, when you are creating a trend reversal flashcard as far as part 1 of your homework. Okay. Now we know we got a trend reversal, so we're gonna do this one for a continuation. So we got a market going from highs, low highs and lower lows, and then market broke structure where it went and give us a higher high, right? And this higher high is higher than the previous high. And as you can see, that market came back, right? It came in the middle. It didn't exactly bounce off the previous lower high. Instead, it came to the previous lower low. At this point, we are now with a bullish trend reversal where we have, after a higher high, we're going to get a what? Higher low. Why? Because this low point is higher than the previous low point, right? So that's where we look to take our buy. Now, after we take this buy, we look for market to break the previous higher high, right? Just like so. Once it break the previous high, we will look for it to come back so we could get a PA. So that's the retracement, right? So remember, it broke the previous structure point, the previous zone point, okay? Once it breaks that point, we just simply waiting for it to come back down, either 1 to this zone, or 2, this, even back to here, because this is a new zone. So at any point when the market comes, let's throw some X's in there to make it a bit easier, okay? Or let's do a bit of check mark, guys. Bring it more to life, right? So the check mark, either here, okay? We'll do here, because it's part of this zone right here, and then down here. So at any moment in time when the market comes into this area, we will look for PA. So look for PA, okay, at checkpoint, okay? Okay, you want to look for your PA at the checkpoint. So at any moment in time, at any one of these points, you will look to buy the market. So the reason why I'm making sure you understand this, I'm repeating this over and over, is because I don't want you to just be like, it has to be here, it has to be here, or it can't be anywhere else. Please understand, even if you get a price action here, it could still go a bit lower, which is okay, right? It's just, you would just have to reset. There's nothing wrong with that. And then you will take it at this point. If it dropped to this, then you will take it to that. Because sometimes that's what the market does. But it is our job to simply read and react to what the market is giving us. So we know we had a downtrend where the market was giving us lower lows and lower highs, right? And then eventually it stops giving us lower lows, right? And then it went to give us a new high, but that high was higher than the previous high. So we have a higher high, right? And then when it came back down, instead of a lower low, it gave us a higher low. And you know, the higher low was created because market gave us a price action, right? A PA. It gave us a PA, okay, to go up. So let me just throw that in there also, just in case if I did not mention that enough, okay? At every turnaround point is a price action, okay? Every turnaround point is a PA, meaning the market stops here and give you a bullish engulfing. It went up. It stopped there and give you a bearish engulfing. It falls. Bullish engulfing, bought up. Bearish engulfing, back down. So please understand that, right? The turnaround point is where the market give you a change of reversal price action, right? Remember, price action, price is at a level, and the action it gives you is a bull candle that's bigger than the last selling candle, indicating it's now time to take that action to go up, to buy up. Price, action, price, the level, action, engulfing, time to take that to go to the top side, to my understanding, okay? So let's go ahead and jump into the next one real quick, where we're gonna do a, where are you? We're gonna do a, there you go. We're gonna do a more of a range, okay, before we break out. So as you can see here, right, we have market, again, a downtrend market where it's falling to do, right? Now, we'll make that a bit more attractive. As you can see, market is sitting at the zone where we get an equal highs and equal lows, right? So what we're waiting for, again, is a breakout. Sometimes, as you can see, market could range, meaning it could sit within the zone. So what you're waiting for is, again, is a breakout. Now, because it's in a downtrend or it's bouncing off the zone, it doesn't mean we want to break out to the downside or break out to the upside. Our job is to simply to wait to see which way it's going to go. Okay, meaning I know we're going over buys, meaning that it could have easily do something like this. Okay, we're gonna dot at this. Okay, it could have easily done this and come back to retest. Now the retest point could be anywhere, either within the zone or the mid, okay, or within this point right there. And then at any moment in time, and then to come back down from here, here, or down there, okay? That's still a break of retest. This will be for the continuation sale, all right? Now let's go back. All right, so since we're talking about buys, right? So we're looking for a breakout to the upside. So we're looking for, all right? So let's go ahead and generate that. So here, right? It came down for one more time and then give you another hit to the bottom side and then finally broke, okay? Market finally broke structure. Now we would wait. Okay, we would wait for the market to come back to retest. All right, so now again, the market will retest 3 points. The first one would be, you could call it the middle of nowhere if you want, but if you pay attention to detail, this is pretty much the middle. Okay, right? So the check mark will be the areas that the market can come to give you that price action that you're looking for. So first one is here. All right, the second one is right there. All right. And the last one, which is the third one, let's extend that to match this real quick. Okay, we'll be right here. Okay, so I know the check mark is all the way down there. I mean, you know, these area. Okay, so any one of those threes. Okay, so what we're going over basically is a bearish trend that is transitioning into a bullish trend, but before it did, it consolidated or range within points. So again, all you have to do is simply wait for a break, and the break is here. So please understand, all of these are the same when it comes to lower high. So you don't have to name it, right? I just need you to understand all of these, okay, are lower highs, okay? So it's just one, vice versa. All of these are lower lows. All right. So we have a break of a previous low high, just like before. For us to get a trend reversal, a previous high has to be broken. In the case of this, if it's for a buy, a low high has to be broken. And of course, we look to take our buy at a high low. All right. So we got a break, and then there goes our pullback. Okay. We're just going to drop it here. Boom. So right there, we'll wait for a PA, aka our price action. To be more specific, since we're talking about buys, right? We'll be looking for a bullish engulfing. So for our PA or price action, it's going to be a bullish engulfing, okay? Okay, it's going to be a bullish engulfing. So let's go ahead and bring it a bit more to life. So this will be our selling candle. Boom. Like so. And then this would be our bullish candle. It closed above the last selling candle. Okay. How do we know it closed above? Because of here. That was the opening of the bearish candle. And then this is the opening of the bullish. This is where it closed at. This is where you would have entered for your trade. Okay. So you will look for this anywhere in here to go to the upside. All right. And then let's go ahead, jump into the continuation, since we're talking about, you know, bullish reversals. So I'll see how it would look like as it continue up. All right. And you can see it right here. We got the lower lows and the lower highs, right? Preset already, right? Low highs, right? Because it's getting lower and lower, right? Same thing, low high, okay? Because it is not higher than the previous. It was up there is when you get that. So look at the beauty of this, right? We got a double bottom, right? And then market give us a low high, but it also end up giving us a higher low, right? We just have not gotten a higher high yet. It's just, that's just how it works. Sometimes some trend reversals, it's just gonna present itself in that type of characteristic. So this is really, really dope. Please make sure you take your time and put the detail on this when you are creating this flashcard, okay? I need all the information possible. That way, when I look at this, I know everything about it. And also, right, I want you to tell me, right, what's happening here as far as market give you a lower high, but this time it give you a higher low, where normally you so used to seeing a higher low after a higher high, okay? But, you know, and not every lower high is going to be as even, but that's just one variation. Now, we finally got a break where, you know, it's all the way up there. This is the area it's matching. And then here we finally got a higher high that's higher than the previous, of course, high. And then the retest point is off 2 points, 2 structure points, right? So right here is where you will be looking for your PA, okay? Right here, you'll be looking for your price action, okay? And after you take this, right, this is a previous structure point, just like before. Remember, every turnaround point is a zone. So since it stopped there, we would have placed a structure point like so. It's just a zone, a top zone for when and if it breaks, meaning, see, notice it went above, so it broke the previous structure point. We're just simply waiting for a retracement, right? Since it stops here, so that we got a new higher high, right? So that's going to generate a zone. And then you see it comes back to the previous structure high to give us that high low, right? That's where we'll get another PA, okay? And then we'll go continue up and above, right? So, and then we'll buy it accordingly, right? So it could do something like this right there and then do something like that. Let me get rid of this real quick, right? See how it broke above? It could also do something like that where it breaks it and then come back down to here. This will be considered as a new higher high. And then again, it's still the same. It's still within that zone. That area itself, if it's matching within this, will be the same higher low, okay? It will be the same high low unless it was to break above. But here, we will be looking for a price action, okay? A PA to go up. It could either match it or go higher. Please remember, after every turnaround point, that is a structure point zone. All right. We don't really care for the name, of course, but we know it's just a top zone. We're just going to respect it for what it is. All right. So this is, again, the different variations for trend reversal from sell to a buy. So we already went over a double bottom, and basically we was going over what happened after the double bottom. So let's do this real quick. I'm going to go ahead and pull up the variation, the most common three variation of a double bottom, right? So we got the first one where we got two equal lows. I mean, like so, boom. And then boom. All right. So initially you look to take your buy at point, and we are talking about here. And then we looking to see what market will do after we take our buy once it goes up to break structure point, and then we wait for the pullback, which is within here. Okay, so that'll be the break. Okay, right here, that's the break, and here would be the retest. Okay, retest point, and then to go up. All right, now I'm gonna keep that exactly how it is. And I'm just gonna do a little bit of readjusting, okay? So let's move this. So we could do something like that. Okay, so same concept where we get this coming down, right? Stop midway. And then, you know, of course, here, where we get a price action somewhat in the middle. Sometimes the price action will look something like this with an extended wick. So because it looked like it did not hit our zone, okay, to go to the upside, right? So different variation of a double bottom. So this is where we don't have the equal lows, right? That's one, and that will be the second one, okay? And then, of course, we have the third one. All right, so let me draw that third one for you real quick. Is when we have first low, and the second one dipped somewhat a little bit, and then to go up, right? So you see, notice I went below it. So do something like this here real quick. Same point, right? It dipped lower. Boom. Okay. Bam, right? Just a little bit lower. Okay. But it still give us a break and retest at point to go up. All right. So we got from a regular double bottom where it's above and a bit below. And of course, we get the double bottom that either wedge. Let's do the wedge real quick. Okay. And let's bring this to life also for you. So what we're going to do is let's do that again. Right. So we got one bottom, right? Up. When it comes down, a wedge. If you notice that each lower low is the same, but each low high is getting lower, and then boom. Okay. So We wait for the retest point to go back, right? So it just wedge in a way, okay? Different variation. And of course, we do have the range, right? You could also call a consolidation where it falls within zone and then it just does this. Notice how the highs and the lows will be equal and then like so. Now again, the retest point varies, right? It could come to here and then to go up. Okay, see that in range, or it could have came back to here and then to go up. Okay, so with this, we could bring it back to here, something like so, like that, right? Make it look more better. Okay. Like so, right? It just range within point. All right. Vice versa, it could have wedged. So those are the different variations. After a double bottom is a break and retest. Also, we got continuations with that. All right. So that will be the 3 variations. So please remember for your homework, right? We are creating not exactly that, but we are creating a trend reversal, right? And then marking our highs, our lows, and you telling me that this right here is the break, this right here is the retest. That's where your price action would have been. Of course, stop loss will go at the last low, and whatever type of price action you choose to use, any one of our 5 to 6 different variation will do. All right, you go ahead and give me all the information possible. Tell me this is a bearish trend that reverse, and the characteristics with that will be from lower lows to lower highs, and then transitioning from lower lows, lower highs to a higher highs and higher lows. And I also want to know that you are taking your buys at the higher low. Okay, please write that down and go ahead, just like before, take a picture of that, post that on the homework section in the Discord, and I'll go ahead and look over it. Don't worry about messing up. Just give me your best effort. And anything that you're missing, I'll just help you out with that, right? Don't be in a hurry to create this just to knock out your homework. Please take your time and put as much effort as you can into this because it matters, okay? Because I need you to understand this. If you take your time to do this, it's going to resonate with you even better, okay? So I'm going to see you guys on the next section where we are covering double top setups, all 6 to 7 different variations. And then, of course, after that, we'll follow with break and retest after a double top. All right. Boom. Appreciate you guys.